Maybe you've been sent a mortgage quote, commonly known as a key facts illustration. But what does it all mean? In this video, we're going to break the document down into each stage. Coming up. What's up people, Alex Kerr from Mortgage Chain. I'm a qualified mortgage broker, and on this channel we provide the best tools and tips to first time buyers. If you're new to this channel, please consider subscribing. Let's jump into the video. So a mortgage quote is commonly known as a KFI, a key facts information sheet, or now some lenders are using ESIS, ESIS, which is a European Standardised Information Sheet, which is obviously provided to standardise across Europe. Some will have 10, 15 or even 20 sections breaking down all the information individually. So we're going to look at the main parts that you really need to focus on when looking at your mortgage quote. So on the first page you're going to have the mortgage lender, their details, address, phone number, website, things like that. If you're working with a mortgage broker, you will also have your broker's details as well. On the next page you will have all of the mortgage loan and fee details. This is going to tell you the mortgage provider, the rate of interest, whether it's a repayment or interest only mortgage. A repayment mortgage is also known as a capital and interest mortgage, where you pay the capital and interest at the same time. Certainly recommend that as an option. It's going to have something called an APR, an annual percentage rate. That is the rate of interest you'll be paying, taking all the fees into account over the whole year. Annual percentage rate. You're going to have the mortgage product, whether you've gone for a fixed rate, a variable rate, and over how many years that mortgage product is. For example, if you went for a 2-year fixed rate, it would tell you fixed rate mortgage until, and then it would provide you a date in roughly 2 years' time. That is the date your mortgage product will expire. You'll then have any fees associated with the mortgage. You may have an application fee or a survey fee. You may have a booking or an arrangement fee provided by the mortgage lender. You will then have a choice whether to pay that up front or add it to the mortgage loan. If you add it to the mortgage loan, you will be charged at the lender's standard variable rate of interest, which will also be shown on this page, probably be shown as SVR. And it's very important to know that when your mortgage product we spoke about, the 2-year fixed, which has an expiry date, what happens when that mortgage product expires is you will revert to the lender's standard variable rate of interest, which is normally higher than the fixed rate or mortgage product you chose. So it's very important to renew your mortgage before that end date. And of course your monthly payments will be shown on this section, which will tie in with your mortgage product. And then when your mortgage product expires, you'll go on the lender's standard variable rate, and it will also show you the increase in payment on that section. As we go further on into the document, you'll then notice a schedule, a repayment schedule, which is set out. This will show you your monthly payment. It will show you how much of your payment is going on to repaying the capital and how much of your payment is repaying on interest. And it will break that down each month over the duration of your mortgage product. And then after that, it will just show you the amount you're repaying each year until the end of your whole mortgage term. Finally, in this section, you'll also see your interest rate and the mortgage term you have chosen, whether it's 25, 30, 35 years. That will be shown here as well. So with your repayment schedule, you will know how much of your mortgage you are paying off each year, which is obviously critical to understand. You'll then move on to the next section, which talks about repayment charges or early repayment charges. So for example, if you chose a 5-year fixed rate or a 5-year discounted rate, you may see that during that 5 years, if you were to repay your mortgage early, there would be a penalty. Majority of the time you would wait until that product has expired. You're then free to pay the mortgage off without penalty. But if you wanted to do it within that time, you'll see that it breaks it down each year, starting with a percentage. In the first year it will be the highest penalty, and then it normally decreases as each year passes. You'll also see in this section if you're allowed overpayments. Now this means you can overpay on top of your normal monthly payment without a penalty, and that overpayment will reduce your mortgage balance. It's important to understand that if you're getting annual bonuses, things like that, really handy to reduce your mortgage even more. It is also worth pointing out that if you wanted to move home within the 5-year period of your mortgage product, if your mortgage is portable, which most are these days, it means you can take your mortgage with you to the next property without a penalty. So it's always good to have a portable mortgage so it doesn't restrict you to the same property or charge you large penalties if you want to move. So double check that as well. And then lastly, towards the end of the document, you'll see if you've got your deal from a mortgage broker and not just one bank, you'll see the top 30 deals on that bit of paper. And you'll see where your recommended mortgage product that the broker has recommended is in comparison to the top 30 deals. Now hopefully it's going to be right up the top where the best deal is. Sometimes it isn't, and if it isn't, then the mortgage broker should provide you with an explanation. For example, the best deal on the market, they may not be able to give you a mortgage, maybe due to affordability, the property type, maybe you're going for shared ownership, help to buy. Not all the lenders will do every single mortgage. So the idea is to get the very best deal out of all the lenders that will lend to you, reflecting your circumstances. Question of the day: do you need a mortgage quote? Let me know in the comments. Please note that we are obliged to tell you that your home may be repossessed if you do not keep up repayments on your mortgage. So thanks for checking out today's video. Hope this has provided you with an insight into a mortgage quote, and if you're new to this channel, please do consider subscribing. Till next time, Mortgage Chain are bringing the best tools and tips to first-time buyers. Have a beautiful day, and we'll see you in the next one.